Good afternoon, everybody. And we from Grant Thornton Bharat welcome you all for this webinar titled 194 Deciphering Section 194R, Addressing Implications in the Pharmaceutical Sector. I am Banu Prakash. I'm partner in the firm. I lead the sector life sciences and healthcare nationally. We have 450 plus registrations. I think we'll give a minute for people to join. I can see 100 people already in the session. Thank you all for joining. I think 194R was introduced a few months ago, and it has created ripples in the pharmaceutical sector, and just not in this sector, but also in other sector as well. As you'll see from the participants from other sector also have joined this session. Many are grappling with on practically implementing the aspects mentioned in this section. Regulators have issued FAQs, but there are still open items. So I think that there's a lot to do from the section. So to address some of these challenges, we have an interesting lineup of experts from industry as well as Grant Thornton to share insights and solutions on how some of these can be implemented. We will start the session with a 15-minute presentation to just give an overview of the section and some of the aspects. And then we will deep dive into a panel discussion of 30 plus minutes to share some of the practical solutions on how this can be implemented and also discuss some of the challenges which still are yet to be addressed. And in the end, for 10 minutes, we have a Q&A. I request my fellow professionals to post their questions in the Q&A box. We will try to address as many questions as possible. If we are not able to complete it because of the time, we will definitely reach out to you to address those offline. Without further ado, let me introduce the speakers. Johan, if you can probably, remove everybody and highlight the speakers. Yeah. Starting on my left on my screen, I can see Mohan, Mr. Mohan Krishnan Osethi. He is a Senior Vice President and Head of Indirect Tax of Lupin. Mohan comes with 3 decades of experience in indirect tax, pretty interesting profile. He has worked in the Revenue Department of Government of India, has been in the consulting as well, and in the last 10 years with Lupin. He has represented industry in various forums such as CBIC and has also authored various articles. Welcome, Mr. Mohan. I'll move next to my is Mr. Rahul Verma. Rahul Verma is a Senior Director Tax of Cipla Limited. Mr. Rahul is a CA and has over 25 years of experience in the field of tax, both on professional services space as well as in the industry. He has worked in multiple large companies, NIIT, Intex, Apollo Tyres, and in the last 6 years with Cipla. He has been recognized by various forums and is a regular speaker at various events. Welcome, Mr. Rahul. I have next Mr. Sujay Paul. Sujay Paul is a chartered accountant and partner in direct tax practice. He has over 20 years experience in direct tax and regulatory field, advising medium to large multinationals, listed companies and large private companies in various sectors. Some of his expertise is on direct tax, compliance and litigation, mergers and acquisition, inbound and outbound investment. Welcome, Mr. Sujay. Next on my screen is Mr. Biren Vyas. Biren Vyas is my colleague partner in tax based out of Mumbai. Biren is a chartered accountant and has over 2 decades of experience both in industry and in the professional services firm. He has advised several companies on GST, SEZ, FTP, and incentive schemes. He's a core member of our GST group. Prior to Grant Thornton, he has worked with RPG, Asian Paints, and other consulting organizations. Next on my screen, last but not the least, my dear friend Karan Kakkar is a partner with us in Grant Thornton. Karan has over 15 years of experience in indirect tax, specializing in GST law, pre-GST laws. He has advised on customs and foreign trade related policy matters. He has advised many life sciences companies and healthcare companies. He's a regular speaker at various forums and has also authored many articles. Thank you. And now I hand over the presentation to Mr. Sujay. Sujay, over to you.
Thanks, Manu. May I request these slides to be put up? Yeah, thank you. So I think as the context has already been said by Manu, that this is the new section which was brought in effective 1st July 2022. And of course, it has created ripples across the industry. And of course, life sciences and healthcare industry is one of the main impacted sector because of its typical nuances of certain areas which are impacted by this section. Of course, I think the larger group, I mean the participants as well as us, have already been aware of this section. There is a lot of discussion that has happened in the public forum, a lot of articles being written. We all know the CBDT has come out with 2 circulars in a span of 3 months, clarifying a lot of open issues of this section and how it applies to different kind of transactions. And I think it has brought in a lot of clarity. Having said that, there are several open issues or unresolved issues which are still there and continues to be a pain point for the industry. I think if you can just move to the next slide. I mean, there are certain fundamental issues to this section, which of course we're not going to discuss in terms of the scope of the section, in terms of, let's say, why the section was introduced. There had been a debate that was this section really necessary, given that there is enough data which is already available with the government, and what is the purpose? Was it a revenue generating section, or is it essentially to gather more data? I think there are different debates about it. Even the scope of the circular was being debated, that are these binding on the taxpayers? Because as a concept, we know that the board circulars are not binding on the taxpayers, but binding on the tax authorities. But there had been different views about it. But I think we'll not go into those issues here. Having said that, before we jump into the details of the provisions in terms of how it impacts the healthcare or the life sciences sector, I thought it will be relevant for us to just quickly overview the different the key salient features of the section. So I think in terms of coverage, the section actually applies. It brings in an obligation to withhold tax in case of benefits or perquisites arising from business or profession, and whether such benefits are convertible into money or not. I think that's very important. And I think there had been a lot of clarity being given by the CBDT in the clarifications, how the taxes will be required to be computed if it is not convertible to money, or if it is in cash or in kind. In terms of the rates, of course, we know the rate of tax to be deducted is at 10% of the value. Of course, it increases to a higher rate or a penal rate of 20% in case the PAN of the recipients is not available, or in case of specific non-filers of returns of income. One interesting point on the coverage or the rate is that this is a section which you can't obtain a lower or a nil withholding certificate, which is typically available for several other withholding tax provisions. So an application or a certificate under Section 197 of the Income Tax Act is not really available so far as this particular section is concerned. So if the section applies, then a withholding has to happen at the prescribed rate. In terms of the value or the threshold, it is, we know it is 20,000 per year. So the aggregate value of the benefit of the perquisite vis-a-vis a particular recipient, if it exceeds 20,000 in a financial year, then this the withholding obligation is there on the payer of the on the payer of the benefit of the perquisite. And of course, it extends to any benefit of perquisite given to residents. So far as currently the non-residents are exempt, or any benefit given to a non-resident is not covered by the provisions of this section. I think in terms of coverage or the persons who are obligated to withhold tax, there are certain thresholds which are there. I think it applies to most of the taxpayers except for individuals and HF, which has got sales or turnover from business which is less than 1 CR in a year, or in case of a profession, it is less than 50 lakhs in a particular financial year. Now, coming to the different kinds of the perquisites or the benefits, I think there are possibly situations where the benefits could be in cash, or could be entirely in kind, or could be a mix of both cash and kind. And I think the section, it has been clarified with this ability that the section will apply, the obligation to withhold tax will apply irrespective of whether it is in cash or in kind. And I think it has prescribed a way how there is, in the event that the cash component is inadequate to cover the withholding that is required to be done, then an obligation is there on the recipient to make sure that the taxes are paid, or the payer has to ensure that the essential TDS have been paid to the government before the benefit or the perquisite is being granted to the recipient. I think there are some of the basic features. Of course, as we go into more details, we'll also see that while the CBDT has clarified a lot of aspects of the application of the section, there is a good interplay between the provisions of 194R and certain provisions of the GST legislation, which will have an interplay in terms of how the industry is going to look at it. I think these are some of the interesting areas that we are going to talk about as we move ahead on the discussion. I think we'll go to the next slide. I think more specifically for the pharma industry or for the healthcare industry, one of the issues which is very relevant is the issue about free samples. Now, this has been an area of importance for the pharma industry, just because of the fact that there is a specific reason why free samples are being distributed by pharma companies into the into the medical community, especially to doctors and physicians, typically called as the physician samples. I think in the CBDT circular, it has been categorically mentioned that these free samples would not qualify as any kind of a discount or any trade discount or a cash discount, and therefore the section 194R will clearly apply to the extension of free samples to doctors and physicians. Having said that, I think it still remains to be deliberated is that whether extension of free samples to doctors or physicians is really a benefit or a perquisite given to any of the recipients. The reason being is that in more likely than not situation, the hospitals or the doctors are only acting as a conduit or as intermediaries who are eventually passing on the free samples to the end users, which will be a patient or an end user recipient. I think that's an area which has probably needs a relook at the at the legislature level, and I think the industry has been asking for significant amount of clarification on this. So I think that's one of the important areas. I think the other area on free sample is how the value of the free sample will be determined, because most of these free samples are marked as not for sale. So whether the valuation rules or the guidance which is given by CBDT in the circular, which says that if it is a marketable product, it will be the value which is likely to fetch in the open market, or if it is a cost of it is something which is manufactured by a company, then it will be the cost or such value which is likely to be received is something a value which can be considered for the purpose of determining the withholding tax obligation. Now, since these are not marketable, there is likely to be a debate which will always be there that free samples, even if a quantum of withholding has to be done, what will be the quantum on which the withholding tax would apply? One extreme view which can probably come to mind is that whether a free sample which is not really for sale, can somebody say that it is actually of a zero value, which may not be entirely correct because of the fact that there will be interplays with other provisions like a GST provision, which we'll obviously discuss in more detail. And therefore, one has to take a more reasonable view in terms of while we look at comply with the the section and determining a value on this. I think the other point which is extremely important is there are certain guidances under certain other regulatory provisions governing this industry. For example, the Uniform Code of Pharmaceutical Marketing Practices, which somewhere indicates that it permits dosages up to 3 patients to be extended as free samples. Now, the question that arises is that whether can therefore a view be taken that any free sample which is up to the limit prescribed under this Uniform Code of 3 patients, will that be argued to be subject to exempt under 184R, and therefore any sample which is more than the target of 3 patients will be only subject to 184R. Again, there is no clear guidance on this, and we'll obviously deliberate on this issue and also seek industry view on this. But currently, this section doesn't give any such reference. And the only threshold, as I said, is the 20,000 per year in terms of the monetary limit, which will be a limit to determine whether a particular transaction is subject to TDS under 194R or not. And I think there are, there could be similar issues coming in case of drug administered through the clinical trials or pre-launches, though one can always make a point that in terms of the clinical trials and pre-launches, where the medicines are being given directly to the end user, there may not be an application of 184R because the end user is not really in the business or in any profession. So these are some of the areas that are going to be, required more deliberation, and we'll obviously deliberate more as we move ahead. Going to the next slide. I think the CBDT circular has actually laid down, through a good example of how this free sample transaction is going to impact and what is the compliance that is expected from the parties involved. So there could be a situation where a pharma company is actually giving free medical samples to a hospital, and the hospital onwards is giving it to the doctors who could be an employee of the hospital, or could be a situation where the doctor is a consultant and not an employee. I think the CBDT circular makes it very clear that when it comes to the transaction between the company and the hospital, subject to the limit of 20,000, the free samples will be subject to TDS under 194R. And because even if the hospital is giving it onward to its employees, ultimately the benefit is arising to the hospital. So therefore, there is a clear withholding required by the company while extending the medical samples to the hospital. That's the leg number one. I think very importantly, in the leg number two is where the hospital is finally giving it to the doctors. And let's say in a situation one, the doctor is an employee, and doctor is also the end user of the medicines. Then it says, the circular says that there will be a withholding tax required under Section 192, which means that the hospital will have to treat that benefit of perquisite as taxable in the hands of the employee as a salary, and therefore it attracts the TDS under 192. On the other hand, where the doctor is acting as a consultant in a consulting and not as an employee, there would be a second withholding required under an obligation that casts on the hospital to withhold tax under 194R while extending the benefit to the doctor in that sense. Now, the interesting point here is that the circular seems to indicate that if the doctor is an employee, or anybody who is an employee who is receiving the benefit of this free medical sample and as an end user, it will be subject to a TDS under 192, and it will be taxed in the hands of the employee as an perquisite. Having said that, in case the doctor employee is actually passing on the benefit to the end user, which is a patient, a question arises, will that mean that the doctor is not really an end user, and therefore the end user being a patient, there will be no TDS under 192 in that sense. Now that's a view which one can take, but I think it will definitely require a significant amount of documentation and trail being created so that the hospital and the doctor can actually demonstrate that this benefit has gone directly to the end user who is a patient, and therefore there is no perquisite in the hands of the doctor. And I think the other issue which can be relevant here is that whether it is in the case of a doctor which is a consultant, and finally the free samples are distributed or given to the end user of the patient, while the doctor will suffer a withholding from the perspective of the hospital, but he will not have a chance to withhold, and therefore there could be a mismatch between what is appearing in the income in the hands of the doctor vis-a-vis what he is likely to, what will be a free sample being distributed to the end user. So I think the CBDT circular actually clarifies that at the level of the hospital, there could be a tax neutral situation because of the withholding it is suffered from the company and the withholding that it makes on distributing the sample to a doctor. But the same situation may not be there when it comes to the doctor distributing it to a patient. I think these are some of the open issues which are going to be deliberated more. But yeah, I mean, we thought will be relevant for the group to understand. Moving to the next slide. I think these are two more important, very pertinent issues arising out of 194R, and again has been clarified by the CBDT through the two circulars it has issued. One is around the business conference, where it has been clearly mentioned that the purpose of the conference is to be towards promotion of new products or describing the features of the products and so on and so forth. And it also lays down that the period, the days of the conference, the expenditure around the days of the conference and the day prior to that, prior to the start of the conference and the day after the completion of the conference, the expenditure around incurred in that conference will be considered as exempt under 194R. But I think it's important to understand that the CBDT has laid down very strict guidance around whether and what kind of conferences would actually qualify as an exemption and the different other purposes. I think one of the important area is that when a conference is managed through an event management company and a payment to the event management company is subject to TDS under 184C, whether 184R would still apply. Now, if the component of the conference has got any element of any entertainment or any kind of benefit that is arising and it is outside the purview of the purpose defined by the CBDT, in our view, the 184R would apply to that extent. So I think this is again a very important part which is relevant to across multiple industries. I think the other point which has also been clarified in the circular is about where a particular kind of benefit which is there, it is not allocable to the different, to the recipients who are actually participating and who are actually receiving the benefit. Then an option is there for the company to claim a disallowance of the expense and therefore avoid any interest and penalty and not do a withholding on that part of the expenditure. I think the other important part is about the reimbursement of expenses, which is again a very important clarity which has been given by the CBDT through the two circulars, and wherein the circular has clarified that in case where the intermediary is, as a service provider, if the person is incurring expenses on which he is seeking a reimbursement from the service recipient, the exemption for application of 194R would be applicable provided the service provider in that capacity acts as a pure agent for the purpose of which is, and concept brought from the GST provisions. I think this is extremely important that, and it's very common in the industry, like in the example that you can see in this slide is that where an importer is taking the help of a CHS services of for import of APIs on bulk drug, and the CH is issuing an invoice for the service fee along with the reimbursement of the expenses. This question on the reimbursement, whether 194R would apply, is becoming very relevant. And I think the board circular brings about an important point that if the CHA or the agent qualifies as a pure agent under GST law, only in that context, the exemption of 194R would be applicable. So I think this is again an area where we can see a clear interplay between the TDS provisions and the GST provision. And also there will be a lot of other areas where the interplay would be required. So with that, I will hand it over to my colleague Karan, who can take up the interplay areas between the GST and the 194R provisions. Over to Karan.
Sure. Thanks, Sujay. And good afternoon, everyone. So I'll just continue, not to break the tempo. I'll, go reverse, what Sujay has just mentioned on the pure agent concept being borrowed from GST for the reimbursements and levying 194R on that. So I'll tell you, under GST also, there is no GST applicability, on the value of supply if a transaction or expenditure is incurred in the capacity of a pure agent. So who is a pure agent? That has been defined very clearly, that he's a person who is acting like a mediator or an agent to the recipient of the services and procuring goods or services on his behalf and incurring the expenditure and recovering that expenditure from the recipient. So that's, in a layman, I've just explained there are conditions which are attached to the pure agency concept under GST. All the conditions, there are 4 to 5 conditions, all those conditions needs to be met in toto, and this is or cumulatively, only then a transaction would qualify as a pure agent. So in this example of a CHA, while providing his own clearing services, he also pays custom duties on behalf of the clients or the importers. He also incurs any customs expenses at the port, which he gets the reimbursements from the importer. So in a sense, there has to be a complete documentation trail to prove that there is a understanding between the importer and the CHA that he is clearing the goods on behalf of him, is incurring these expenses. Only then the valuation under GST is also allowed.
And likewise, now it has been brought under 194R also, only if we are able to demonstrate before the authorities, both income tax as well as GST, that the expenditure or the reimbursements are in nature of a pure agent, only then there is exemption from both the laws. Otherwise, in both the laws, there will be implications. There will be GST on the reimbursements and there will be 194R to be deducted on these expenditures. So that is how, this supply or, the concept of pure agency has been borrowed, for 194R also. Now, just developing, dwelling on free samples. There are concepts under GST also. There are various, supply chains all these pharma companies follow. So I'll give you an example. There are two situations. There is a manufacturing plant and there are depots, and after depots there are distributors, hospitals, or the other supply chains in the complete system who comes in. So when the depot is supplying the free samples to the hospitals or to further retailers or shopkeepers or directly to the doctors, in that case there is no GST. Why there is no GST? Because there is no consideration. So, which means, and on free samples under section 17(5), it has clearly been told that the ITC of that free samples needs to be reversed. So that is what the industry is also following, that there is no ITC on the previous leg, and on the supply side there is no GST on the free samples. However, things change when there is a movement from intercompany between two different branches or two different, GSTNs of the same company of these free samples also. So there has been a circular, around GST in 2019, which talked about, on the supply side that you charge GST, on the input side take ITC. But eventually, when those goods are cleared from that final branch to these unrelated parties, which we mentioned, hospitals, doctors, distributors, etc., again the same rule applies. There will be no GST on the on the supply side, and on the hindsight we reverse the ITC at that location at that GSTN. However, there is another practice. What is being followed is that there is at the inception we don't take ITC, and on the supply we say even if they are related party, because it is the goods are earmarked as not for sale and as free samples, there cannot be any valuation ascribed towards that. So which means there is no output GST, and input also we don't take. The transaction goes GST neutral transaction. However, now 194R coming in, there could arise complications, so to say, in minds of GST authorities, that if, for example, if a pharma company supplies free samples to the hospitals, so in the hands of hospital, it accounts to be a deemed valuation for 194R. So which means a hospital will record a revenue, or it will be reflecting in the 26 AS of the hospital, which will give a mismatch between the turnover recorded in the GST turnover of the hospitals vis-a-vis the 26 AS transactions and the income tax revenue and the financials. So there is an interplay of GST returns, financials, and the income tax returns because of this. And now, if you really see the intent of this transaction under GST, it is not really a supply by the hospital to the pharma company, because they are actually the recipients of the sample. Just because of this deeming fiction or the valuation which is coming, because to deduct TDS under 194R, there could arise, we are saying there could arise GST implications on account of, I would say, reconciliation, issues can arise because of all these three authorities matching each other's turnover, and they are not reconciling because of 194R TDS being deducted on these supplies. And if I just drill down this transaction into further, that the hospital supplies to the doctors, and these doctors can be of two types. One are the employees of these hospitals, and could be a consultant on the board. So on the consultant on the board, there should not be any issue, because the sample is applied free of cost. Again, no consideration. There is no question of GST coming in here. Now, if these samples are given by the hospital to the doctors who are employees, So here again, the concept under GST of related party kicks in. So moment we say that it's a related party transaction, we need to see the valuation. We need to really see that whether GST should be applicable or not. So for employer-employee transaction under GST, if it is above 50,000, while it says for gifts, it is 50,000, then there has to be GST applicability on the transaction. So we just deliberating and thinking aloud that can it be possible just because of 194R coming in that this transaction of samples given to the hospitals by the hospitals to their own employees who are doctors are also leviable to GST, which again is very very stretched argument. We, in our view, it should not happen that this should qualify as a supplier, but nevertheless, because they are related party, there could be a deeming fiction, of GST under Schedule 1, which might apply. So it has to be really seen and carefully, monitored how the GST authorities are going to look at it once the data is also getting will be exchanged between the authorities. So no, this is broadly, how the GST also comes in, because of 194R on all these transactions. So we will, hear from our, respected panelists also, how the industry is looking at all those provisions. So I end my, slide here, or the conversation what I wanted to, bring to the group. I hand it over to my colleague Viren to take this forward. Viren, over to you.
Thank you, Sujay. Thank you, Karan. While I was carefully hearing, trying to understand the complex provisions and the complex, points which you have simplified very well. Well, I was just trying to understand, and there are a couple of questions which raised in my mind. I would like to take it forward from the points which you have already covered in your earlier slides, and would like to understand from the panelists, panelists, probably what let's hear them out, probably what they have in mind and what they can share insight, particularly. So my first question with regard to with regard to this 194R, Rahul, to you, that probably we would like to understand generally what type of business models are in practice for distribution of free samples, where there could be applicability of 194R compliances, and would like to slightly extend this question, linking it to the one more point which Sujay has covered, that whether we can take a view that we can restrict such distribution up to 3 samples which are permitted as per the Uniform Code of Pharmaceutical Marketing Practices. I know, being a part of industry earlier, probably sometimes commercial decisions are driven away and probably not restricted, considering the tax practice in mind, but considering current since that's quite some time I'm in consulting, I would like to understand what current practice under industry so far on this.
Thanks, Viren. Thanks for giving that opportunity and that question. And first of all, like to thank Sujay and Karan for their excellent analysis of the section. I think the kind of threadbare analysis and the scenario that they have presented are quite intriguing, for us as well, and obviously for the entire audience which is there. I think over 200 people who are attending this webinar. So, Viren, on your question, what kind of models which are going on in the industry for samples and all like that. So, I would like to say, pharma companies are bound by, the drug and cosmetic laws, and obviously the UCPMP and all sort of practices. So first of all, if you simply say, this law 194R and all, the way I think it is worded, and the circular clarifying the doubts are worded in a way which is, colored by some kind of a bias against, the certain industry and certain industry practices. But having said that, pharma companies are bound by UCPMP, right? And UCPMP, give you, while it is not a mandatory code, but a recommendatory code. But yeah, it has got, it provides some kind of guidance in terms of how certain thing has to be handled. And it says like, the way it has to be distributed, it has to be, done on a specific request, and it has to be handed over only to, physician who can prescribe those and it has to be given for 3 patient for their complete therapy, and so forth and so on. So having said that, when it actually happens to the fraternity, medical fraternity, it has to go with that principle, and that is the one which is to the pharma fraternity as such. But having said that, whether we can claim this whole thing as exempt, while I feel that the way 194R is worded, it says whether it's a perquisite or a benefit, then tax is to be deducted. And at the same time, it says the tax and the question number 1 of the first June circular. It says that you need not have to see whether the same is taxable or not in the hand of the recipient, but you have to tax it, right? So, but at the same time, when you yourself know that the same is not a perquisite in the hand of the recipient, right? In that case, it's not taxable. So what I want to say is, while the department with whatever buys it want to tax it, but having said that, as long as the industry and has the proper documentation in terms of how those samples are being distributed to the doctors, and how they are prescribing it to their patients, and if the complete data chain is available, in that case, all the samples which are given as per the UCPMP guidelines could be well treated as exempt from 194R. But that is a strong database required to prove that, right? And if you don't have that, if you have lacking on the database, then I would recommend it's better to kind of play safe, do a tax withholding if the gift or whatever benefit which are going through exceeds 20,000, and then do the compliance and move on. So while this is on the part of the HCP, but having said that, it is not just HCP which are is a trouble for us, because we are not just into dealing with healthcare. We also deal with OTC medicine, and OTC medicine goes through various channels like stockist, sub-stockist, distributor, sub-distributor, and stuff like that. And at times, if I were to kind of break into the monopoly of some say MNC player, and I want to kind of change the habit and behavior of my consumer or OTC patient, then I have to give him certain free samples to kind of experience the the benefit and the after effect from my medicine, and kind of switch over, and that gives huge fillip to my business, because otherwise I won't be able to change the behavior of the customer who has been accustomed to use someone else's product. So having said that, in that particular channel of business of OTC, we face a humongous challenge, because if you were to pass on the samples to our stockist, to distributor and sub distributor, and if the entire channel has to kind of do a tax withholding on each and every leg of the transaction, that it becomes a very onerous transaction. So having said so, even in that case as well, again, the circular of the law is very clear. The tax is applicable when it is a perquisite. But when your law, when your agreement and the way the goods are transferred only as a consignment or as a bailey in trust, to give it over to the patient, which is or a user who is not in the business and profession. In that case, it cannot be brought to tax. It cannot be said to be a perquisite or a benefit, so to say. But having said, again, the onus lies on person who is claiming that, and the entire document trail, agreements, and the entire onus lies on the industry to prove that everything is driven by this whole argument with proper documentation. Thanks, Biren.
Perfect. Thanks, insight. Thanks for insight, Rahul. It was really a great clarification. Clarified a lot of doubts that I had in mind. I will come back to you with one more question, Rahul. Before that, I would like to move to Mohan. I would like to ask one IDT perspective question, though I'm IDT partner since quite a long, and would like to understand the industry insight, particularly Mohan, to you. My colleague partner Karan has already touched upon the point with regard to the distributing the free sample. Knowing fact, being in industry again earlier, that the distributing free sample, particularly for the product recognition and number of other scheme, is inevitable, and let's accept the fact that's the right. But just would like to understand, though he has touched upon about the ITC, how you see impact on ITC, particularly for the business model which are currently in practice, as on date, particularly with regard to the indirect taxes, what impact that you see? Probably it will be great if you highlight some points which helps us. Mohan, over to you.
Thank you, Biren. Good afternoon, everyone. It's a pleasure to be here. As there are two aspects here, when pharmaceutical companies interact with doctors, one is, of course, the free samples, the physician samples, and second, there are certain things which are given, more as brand reminders. So both these things, and as Rahul said, explain the reasons why physician samples are generally given. That is where it is, and definitely these are something more like sales promotion activities. Similar thing with regards to brand reminders. That could be a booklet, there could be a pen, there could be a stethoscope, which is given to the doctor with a particular brand of a company, so that it is as a reminder to the doctor that yes, this company does provide these things, and you should consider their medicines. So these definitely are sales promotion activities. And if you look at the GST law, it is section 16 talks about any goods or services, the tax paid on such goods and services when they're used in the course of furtherance of business should be eligible as credit. But then the government, we know what it is. They give with one hand and take with the other hand. So the subsequent section 17 starts off by say with a non-obstant clause saying notwithstanding what was said in section 16. So that whole 16 is gone. They say very clearly, and there are many aspects where credit is blocked or not allowable. And one of them says when goods are disposed of by way of gift or free samples. So that sort of ends the question, and the whole credit gets blocked. There's no choice that we can do anything. So while definitely it is, there's a good case to say yes, it is directly in relation to the business of the organization, but the ITC is blocked, and that is the reality. So that's what it stands at. Thank you, Viren.
Perfect. Thanks, Mohan. Thanks for clarification. I'll come back to you once again, but before that, I would like to ask a question to my colleague partner Sujoy, and of course, a remark from Rahul as well. Both I would like to hear out, particularly since this question is slightly complex. Precisely, I would like to hear out both of them. First, Sujoy, to you, just would like to understand that probably addressing the practical challenges while implementing 194R on free samples. What kind of practical challenges one can encounter, and largely how it should be addressed. And I would like to stretch a bit again this question that if once it's implemented, probably as a payer, whether we should gross up the taxes in such cases or prefer disallowance the expenditure under section 737. If you can highlight, and once you are done, my request for a crisp answer, we have to hear out Rahul as well. Sujay, over to you.
Sure, Viren, thanks. I think you have already heard all the speakers, in terms of the complexity. And I think Rahul has already alluded that it depends on the person who is actually taking a position on the position of any exemption under 194R on the basis that there is no benefit or perquisite arising in the whole chain. I think one of the important aspect which I see as a practical challenge would be about maintaining of documentation and trail if somebody has to take that position. And while the circular has clearly said that a hospital and when they're receiving the free sample from the pharmaceutical company and onward giving to the doctors, there is a income, or you can say there is a match between what is appearing as an income in its 26 AS and therefore also a corresponding expenditure in terms of what it is distributing to the doctors as an employee or as a consultant. So to that extent, there could possibly be a revenue neutral at the hospital ends. But beyond that, I think the real test would be that if a doctor is going to claim that as a benefit in terms of extending or prescribing the medicines to an end user and doesn't want to what is the position at that level. I think that chain is important. The other is even if there is a withholding to be done, it is subject to availability of PAN numbers and other details. Now there could be practical situations where as a practitioner, one may not be so keen to give a PAN, and therefore there could be practical challenges around doing the withholding. And in that sense, there may not be much option but to really gross up, which will end up, increasing the cost for the pharmaceutical company. I think those are some of the issues, and I think the way the example of the CBDT has said how this is really a revenue neutral transaction for the hospital, I think the impact of that in the books of accounts would also be a relevant point to be seen. I think there are some of the key points, but I mean, as you rightly mentioned, I think it will be important to get Rahul's view on this as well.
Perfect. Thanks a lot, Sujay. Rahul, over to you.
No, you are right. I think the practically the difficulty.
Rahul, you are not audible. Rahul, apologies for you are not audible slightly. If you can come close.
I'm audible.
Yes, absolutely right.
Yeah, so the issue, or the biggest challenge in compliance of 194R has been maintaining data, and right now the kind of data that we are having in SAP, it's only up to issue of material, movement of certain material from say our main depot to our sales depot, and the matter is over. But having said that, the compliance to 194R require a lot of integrate data in terms of how the goods or samples or the brand reminders, how they are traveling from our sales depots to various SCP, in terms of various paperwork which is done on the ground by the field staff. All has to be kind of looked at, and everyone has to be guided in terms of what are information that you need to collect in terms of PAN number, in terms of information about the name, address, and all of the all our business partner, all our SCPs, and all our hospitals, so to say. So it's a big task in terms of big compliance burden on the entire channel. And and we had been kind of doing it in terms of else you have to gross it up, and grossing up is a bigger issue, because you have this grossing up as one issue plus 37(1). So in fact, in a layman's term, if you kind of have to pay a gross up tax or a brand reminder along with a disallowance of 37(1), it is effectively 50% tax on top of the expense. 100 rupee of expense will actually end up at 150 in your cash flows. So the more you do compliance in terms of obtaining all the detail in terms of PAN number and addresses of all the business partners and all our distribution channel partners, then we could reduce the cost of TDS without grossing up, and at the same time if the same is as per the applicable laws, then you not have to suffer the disallowance under 37(1), so to say. And in database, and the transparency is the key in terms of how cleanly and how transparent data is made, and that is the way to kind of go forward too. And at the same time, in one of the FAQ about this business conferences, I think there is some clarification that if you are not able to dissect between how much is the leisure time and how much is the conference time in any of the business conference, then you may disallow the entire expense, and you can very well probably get away from the consequence of non-withholding of TDS and 201 consequences. I think this is a welcome clarification. When you are not able to find out whether it is how much part is leisure and how much part is business, then you disallow the entire thing, and you only face 25% cost, which is otherwise 25% cost of grossing up. So it's one and the same. The net cost would be 25% in the new regime. Thanks, Viren and Sujay.
Perfect. No, thanks. You have rightly clarified that it is a welcome clarification that goes without saying. But I would like to understand in that case one angle from indirect tax perspective as well. Being again complex, I would like to hear out both of them, Karan and Mohan. First of all, I would like to understand from Karan, though you have touched upon that impact of 194R probably will result into variance in the turnover, and probably it will impact the turnover, where there will be a difference between the turnover under income tax and turnover under the where the already agreement in place to exchange the data between the tax bodies. Probably this will be certainly one of the point which will be picked up by the authorities to ask industry about the clarification and explain the difference between both the turnover, particularly under GST and income tax, since variance will be there. Probably what you think, what you have in mind to address with regard to it, and probably something more that you can clarify on this.
Right. Thanks, Ben, for again touching upon on this point. So see, let's appreciate what has happened past 5-6 years. There has been a lot of automation and a lot of artificial intelligence what the departments have got. When I say departments, it's both at CBIC level and CBDT level. and that goes down to the entire gamut of their offices. So what has happened, if and also if you see the compliances, they are asking data of GST and TDS returns or income tax returns, and vice versa. Whenever the GST audit happens, the auditors comes, he's also picking up transfer pricing reports, he's picking up income tax returns. So they are cross-checking every aspect of the transactions, what or the revenue what the company has done, or the expenses what they have incurred. So coming to this section, like we said, in one hand we say there is no GST, there is no supply. The other hand, if the accounting treatment also becomes extremely important for the companies to see how they are really recording these 194R deemed income transactions, especially in the hands of recipients. So if they are recording it to be a revenue in my profit and loss side, when I report my GST turnover, this turnover will never come because this was never a supply in hands of a recipient. He's a recipient. So there will be a reconciliation issue that needs to be explained. Or if there are companies who are also knocking off their expenditures, so it will never appear as part of their income stream. However, it will again reflect in 26 AS. So because 26 AS also can be picked up by the GST officer, we need to be prepared to give that reconciliation. Boss, this is never a supply under GST. This was only a mechanism to pay your TDS. So that all explanations and documentations around that needs to be ready with the SACs. It should not be a surprise that they're being questioned on all these things. Yes, it will add to a another burden of maintenance of these accounts. And like Rahul rightly pointed, that it's all boiling down to how well organized you are, how well systems you have to create that database to have all the information of your recipients. And KYC becomes extremely important here in both income tax as well as GST. So that is how the I would say the variance between GST returns, financials, income tax returns, 26 AS, all needs to be seen under one umbrella for a single transaction. So while this is what I could perceive out of this, I would request Mohan's views also, that how does he see and how does he see, and what are the challenges from industry aspect, what can be coming, and what are the solutions around that. Mohan, over to you.
Yeah.
Thank you, Karan. Yeah, just to add on what you said, if we look back historically, under indirect taxes, be it from the sales tax time, excise, service tax, all these were typical transaction level taxes, unlike income tax. But with the introduction of TDS in 2010, we are getting into transaction level taxation even for direct tax purposes. And that net of TDS is only expanding over the years. So now, we have this whole scenario where, every expense is getting taxed, both for GST purposes in some way and definitely for TDS as well. And now it becomes very much necessary to have a single source of truth in terms of data. But see, the principles are a little different. When we look at GST, we have to do ITC reversal on a free sample or any other such thing. We look at what is the cost for the company and we say, okay, this is the ITC I have to reverse. But when we look at TDS, we need to look at the deemed income of the recipient. So, the bases are very different. So in terms of having the documentation and the data ready is very important. And it is not very far off that we know that, we are going to see joint audits by probably the direct taxes and indirect taxes going forward. And in terms of how we are going to address that is going to be the next challenge. Thank you so much. Over to you, Biren.
Right. I completely agree. This transaction will be a kind of transaction where success will highly depend upon the backup document which is created, and probably that would be the right step. But still, probably one more point which I was thinking, that probably if at all, I know it's a bit difficult, but if at all, both the authorities can jointly have a meeting and come with some sort of clarification, which might not be completely reduce, which at least reduce to some extent, the complexity which is prevailing there with regard to, explaining this, reconciliation and, differences. Probably it might be helpful. That's something probably we should look at it. And in that case, just next question, which I would like to, Rahul, if you can, if you can clarify on one point which was there in my mind with regard to, valuation of free samples. The valuation of free samples, probably, do you see valuation of free samples for compliances as a challenge? And probably, if you can explain a bit, Rahul, that how industry probably deal with it, and what are your views on the conditions which is prescribed under CBDT around, business conferences or number of other, such, approaches? Are these impediments to business or industry, or can realign, their activity to comply, and probably something around this, if you can clarify, will be of great help.
No, yeah. So on the samples, etc., it is still pretty clear in the sense, it gives us the method, like if you have something which has a market value, the PTS, price to stockist, that is our realizable value on those goods. So that is the valuation that we do for all those samples, and accordingly kind of value it for the purpose of the 194R. While for GST, obviously, unit is based on cost of goods sold, that we have to reverse the GST input credit. So this how we do, and the issue largely comes into not with samples, but with respect to things, or the free samples, or the promotional item that has to be distributed through the OTC business channel. Again, if some goods are being distributed which are procured, obviously all those items now are to be valued at the procured value. Like if some kind of say along with the cough sales or a cough syrup and all, if you are incentivizing your distributor with some FMCG product like a coconut oil or something, then all those has to be kind of valued at the procurement price of those goods and tax under 194 to the entire channel. So this is how the valuation thing goes. And yes, there's a lot of development around system in terms of how those tax and 194R tax to be applied to the goods which are moving under delivery channel, post the goods being originally supplied, when the samples are going, or when the schemes are going through delivery channel, how to apply the tax and the reversal of GST on cost, so to say, making both the compliance on the same movement of goods.
Perfect. Great, Rahul. Sujay, Karan, would you like to take up one question, Sujay, particularly about 194R from the chat box, or I already have one question which was received at the time of registration. I can take it forward and I can ask that. Whatever, choice is yours. Both of you. Please, Sujay, over to you.
No, go ahead, Biren. I think whichever question you have with you can ask.
Perfect. So, just I think this is a question probably where you and Karan both will jointly answer, though it was again once upon touched by Karan earlier, slightly in elaborative manner while discussing the GSA slide. I thought, let me ask you, reframe and ask you the question. What is the view with regard to, withholding taxes under section 194R on reimbursement of expenses incurred by the CHA? While Karan did mention some points around it, and what implementation challenges do you foresee given GST concept of pure agent being introduced by new circular? Karan, Sujay, first you, and then Karan, I'll come back to you. Probably this could be the last question considering the time constraint. Go ahead, please.
Yeah, absolutely, Biren. So I think as we've already alluded to, it's a very important element. And I think purely from an income tax perspective, reimbursements had always been subject matter of debate on withholding tax. I think generally the practice which is followed is that if the reimbursements are part of the same invoice as the main fee, then the entire amount is subject to withholding. And this has been clarified long back by CBDT when 194J and C was under those sections. Now the only question is that when I think the CBDT in the context of 194R has clarified also that if the invoice is, the reimbursements are already in the name, the invoices are raised in the name of the service recipient, then there is clearly no benefit arising in terms of the service provider, and therefore the reimbursement will not attract any 194R. I think the issue that comes is that where the invoices, those expenses invoices are not in the name of the service recipient, but in the name of the service provider. And then there is a reimbursement. That's where the interplay and the relevance of, or the, the drawing of the provisions of the pure agent from GST becomes more and more important. And I think that's where those conditions of pure agent, which I understand is not very simple to comply with. I think they are pretty stringent, and I believe these are all cumulative conditions to be fulfilled. Only in those circumstances, the exemption under 194R is really applicable. So I think while I'll leave it for Karan to conclude on this, but in my view, this is going to be stringent, and a lot will depend on how strictly these conditions are fulfilled. And again, this will be an area which will be looked at both by the income tax authorities as well as the GST authorities from both the angles. So yeah, Karan, over to you.
Sure. Thanks, Sujay. I'll just keep it short because I've elaborated it earlier also. So these conditions are definitely stringent. They have to be followed in toto. And these are cumulative conditions, not either or conditions. And one needs to have proper, robust documentation around it, both from GST as well as 194R, because they will go hand in hand. And there has not been a lot of precedents also around pure agent concept, because this has been borrowed from service tax regime, and it's not a new under GST. But yes, nevertheless, like you also alluded to that, and I am also on the same view that the documentation is the key. We will really have to keep it very, very robust documentation around to claim any exemption under both the laws, because this is clearly exemption we are talking about, and government will look this into minutely, all these transactions, and they have been subject matter of litigation also under service tax, at least on the reimbursements. It has reached to the highest courts, and that has been decided against the industry that reimbursements are taxable unless and until pure agent conditions are met in toto. Yeah, that is how I want to conclude this topic. Brain, back to you.
Perfect. Thanks. Probably while we are running slightly short of time, Sujoy, if from chatbacks any question that you would like to take, or rather, considering the time constraint, I can move straight away to Banu. Probably Sujoy, choice is yours.
No, I think we are actually past 4. So maybe, yeah. So I think there are a lot of questions which have come up. So we'll obviously go back to each and every participants and we'll answer them. We'll reach out to them and definitely, but I'll maybe refer it back to Banu for his concluding remarks.
Perfect. Yeah. We will surely reach out to the question who has raised the question either by mail or maybe some other way, and we'll surely communicate. We'll discuss. As considering the time constraint, we would like to keep time constraint in mind. And Banu, over to you. Probably overall the industry panelists and our colleague partners, they've given a good insight, quite clarificatory and elaborative explanation, and the way practically what challenges are there and probably how it can be resolved to some extent. They've tried to address those, was really helpful. But what do you think? What about your closing remark? Probably it will be helpful if you could highlight something. Banu, over to you.
Thank you. Thanks, Brian. Thank you, speakers. I think pretty insightful session. I do have few takeaways, and I'm sure all the participants have. And I'm still reflecting on Mohan's remarks on joint audits. I think that's going to be interesting to see how that plays out. I think this is a section will probably settle down as time progresses. I'm sure there'll be more clarity. I'm sure regulators are also looking at how things are progressing, and there will be clarifications. And we hope that this will settle down as things settle. I think just wanted to say thanks to all the professionals. You have been a wonderful audience. We are not able to address all the questions in the session. We'll definitely reach out to you and respond to each of these questions to your one-on-one or as a group. With this, we will conclude the webinar. Thank you, speakers. Thanks again for sharing your insights, and thanks to all the audience. Thank you. Have a great day.
Rahul. Thanks, Rahul. Thanks, Mohan. Thanks for joining. Thanks from Grant Thornton. Thanks to all of you.
Thank you.
Thank you, everyone.